Hi traders and welcome to the Friday Market Watch on the 7th of November. We've seen quite a bit of movement this week for a non-farm payrolls week, but we do have earnings in the midst of a lot of the movement. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the US dollar CAD, and we can see it's been fulfilling all of its promises that it's given us over the last few weeks. We've got obviously the morning star pattern. It was a beautiful morning star pattern on a 50 moving average, and most importantly, the star being at the roll reversal zone, which is a level of support that was once resistance. That is a gold star trade, and it certainly has gone on with the job. You can see here the actual pattern projected profit for that pattern would be around this level here, around the 140.50, and hit that fairly quickly and easily. And we love patterns that actually do coincide with the movement of a roll reversal zone, which this one did. It blasted through it. And it's it's tracking on up to the 141.80-ish area, which is the next target that we've aimed for, given the support that's actually already there. Really good trading. Look, on a smaller time frame, it looks like it's just gone up in a row, but if we go to something like even a 1 hour, I'll probably show you. You can see the high low sequences most recently have just been fantastic. These are the things that we talk about, week in, week out. Higher lows all the way, pullbacks to the 20 and trade up really strong. The two wicks that we can see on the dailies now are both highlighted by these two peaks here on the 1 hour chart, but realistically, it has been very strong. If we see a little bit of weakness again and it starts to trend down, we'd look for probably a pullback to around that sort of 140.60 area where the next support level will lie. And if it does keep trucking up, aiming for the 140, 180 would be the target, but really good trading here. And well done to everybody who got that. All right, moving over to the all-important dollar index. Still playing the game very strongly this week. This week's last couple of candles have been a little bit soft, but no real surprise for a non-farm payroll day. We're probably going to see a little bit of weakness like that prior to the announcement. It is a very important one again. But it has really broken out well and truly from this zone, so it's giving us all the higher and higher lows that we need, that we're all pretty happy about. I think the 100.50 level is all but tested. It needs to break through. Look, and I don't mind that it's pulling back a little bit, as long as it doesn't come back too far. Even if it came back to around that 99.50, I think that would still be acceptable. If we rolled over there, especially if the 20 moving average caught up, that could give it a really good launching pad up to push through. And once we do get through that 100.50 barrier, I think it really opens us up to some nice moves back up to around that 101.80, which is a very important zone for it. And of course, that really whacks around the euro. If you're going to short it, if you're going to look for shorting opportunities, I'll keep them relatively tight, and I'd only be going to around that sort of 99.50 area as a target if you're hell bent on shorting it, because at the moment the momentum is still fairly strong. So that's the best way to play in that space. A quick touch on the euro, and you'll see what I'm talking about in terms of lower high, lower low. Obviously doing the reverse of what the dollar index is doing, but if we get to that 115.70 to 80 area here and we start to get a rollover, that trend is more than likely going to continue down. So as long as it's correlating well with the dollar index, keep an eye on it. We'd look for a bit of a roll over here at the 20 moving average, and the first sell would more than likely be to around this 114.80 area. That would be my first target on the downside sell. So pretty good trading there as well. S&P 500, the all-important. Look, it's had a really mixed week. We obviously saw all those wicks earlier in early last week, and this week we've seen a continuation. It's trying to break down past the 20 moving average, which is important, but it's also pulled itself up twice now to that roll reversal zone at around that 57.50 to 57.60 area. Very important zone for it. And if it does happen to break through there, really the next target we're looking for is around that sort of 66.20 to 6600, which is a decent move down. So really important that it finds itself at this area just before non-farm payroll. Quite often we know we gravitate to these really important zones. I think that we're more than likely, and it's been a decent move for a week that is generally, as a rule, stagnant. So I think that we're going to pay a lot of attention around this level here. The 20 moving average is right there. The 57.50 is right there. I'm more than likely going to think that it's going to gravitate around this zone until the close of the week, until we get all of the results out. But next week, I think it's open slaver as to which way it goes. I think you can make a case for both. You can make a case definitely for moving to 6,900, or you can make a case for moving to 66.30 very easily. Whichever way the trend is moving, I'd be very comfortable trading in that direction. These are relatively comfortable trades. I'm not overly concerned about the direction now, because we have a good aiming point for the top. It's not like we're going for all-time highs in new territory. We've got a high to aim for. So if the earnings are good and the jobs numbers are good, and we start to higher low sequence on a smaller time frame, we will look at following it up to 6,900. And if it's a bit weaker than expected and we see weakness, lower high, lower low sequences on a smaller time frame, we aim for the 62.30 in the first instance. And I think that's pretty good trading on both sides of those. All right, over to oil. And look, oil's trying very difficult zones here to break through. $60 is a very important zone. It's been playing the game from a technical standpoint really, really well. But on this point here, we've got a 50. We're trying to break the 60, and we're sitting hovering around that sort of 59.50 area. If it maintains its levels underneath here and it's trading late in this session, early next week, in the high 50s, I'd be more inclined to take it down to the 57 as my preferred choice. So if it doesn't get itself up above 60 by, say, Monday, then I'd be looking for higher low sequences to push up back to the 62.50. But if it maintains its levels under the 60, and it's trading in the 59s for the next day or two, I'd be looking for weakening opportunities down to around that sort of 57.50. That'd be the two targets I'd be aiming for on oil, but pretty steady. It's been pretty good trading really from a technical standpoint. Over to gold. Gold. Here we are. So yeah, look, a bit of a standoff. It's found a little bit of support at this level. So it's really close to the 4,000. I think the that is going to be an extraordinarily important zone for it. We want to make sure that we're alert for the breakout. It is giving us a bit of what looks to me like a bit of a pendant at the moment. Or a symmetrical triangle. You can call it whatever you want. It's kind of equals the same thing. It's where price is actually touching both ends and consolidating, and you can see it's getting closer and closer. The 20 moving average is holding up. These generally break either side, and there's no real bias to which one it goes. So I'd be watching this triangle very, very closely. Whichever break we get, a daily break on either side of that triangle will give us the ammunition I think we need to push up to whichever direction. I think if it breaks up past that 40 or sort of 4,020 on a daily, I'd be aiming in the first instance up to 41.50, which are the highs of these 3 weeks here. But if we get a daily close underneath, say, probably 39.20, which is what I'd want to see. At that point, I'd be looking for this flat spot here. This flat zone has given us the most touches at around 37.60 to 37.50. They would be the two zones that I would be touching. I might draw them up so we know what we're talking about. They're the two levels I'd be aiming for, and that pennant lies right in the middle of both. So really good potential on both sides, and I wouldn't be too biased on either side. So whichever one breaks through, we would be happy to run with. So pretty good trading there on gold. All right, let's touch on the all-important coin. A lot of people have been talking about Bitcoin, so let's quickly touch on it. Look, it looks to me, again, I've said it a few times this week, it's been in a big giant head and shoulders, sloping down the head and shoulders, which is one of the worst. Then it had a head and shoulders that was on the right shoulder of the big head and shoulder, which is already played out. That one's already finished, so you can see that shoulder, head, shoulder breakdown. The neckline is being tested again. Well, it was tested again, and now it's pushing down. Very, very important levels. I can't stress enough. There is very strong support here. No question about that. We've seen it all before at around this 101 to 100.50 zone. If we get a break lower than 99,000, I think it really opens itself up to a big move down, and I'm sort of talking in the first instance 93.5. And then down to around that 91, which is around this level here. So this is the area that, let me just bring that right up so you can see what I'm talking about. The 91,800 to 92 area, this is probably closer to 92. I'll pop it up there. That's the area that I'm talking about. It's got the very, very strong support, will be because of the resistance that was there. And that may well be the next aim point. And if it does hit that, that is the target. That is also the target of the big inverse head and shoulders there as well. Okay, so really interesting. I wouldn't be longing this with my worst enemy's money right now, because it is in a dead set downtrend, and I think that I would want to be seeing a series of higher highs and high lows on a daily before it convinces me otherwise. So at the moment, we're only looking for opportunities down unless we get that swing, and we need a very important high low swing to actually convince us to start going longer. If it does go longer, 107 will be the first target that we're going for in the short-term scalp, because that's where the support is. But if we get a daily close below 99,000, I think we're going to start targeting that 92,000 as the target for Bitcoin. So very good trading there, with some really, really good moves. Okay, everyone, thank you for joining us this week. I hope you've had a great week's trading. We've seen some really good opportunities. Just be mindful that it is non-farm payroll tonight, so keep the trades stop losses relatively tight, just in case there is volatility, and we should see some nice movement next week once everything starts to settle down. Thanks, everyone.